So with the Fed saying that the U.S. economy is showing signs of bottoming out, has that affecting currencies? Let's go to our Bloomberg Forex reporter, Patricia Louis, who's standing by in Singapore. Trish, how are they doing today?
Hi, Susan. Well, the currencies, the dollar is definitely continuing to strengthen, especially after the Fed kind of squashed out any rate, or rather didn't go out of its way to squash the rate hike expectations. The dollar is still getting a bit of a lift there. But you know what, Susan? Most of the traders I'm speaking to expect that FX desks will remain one of the biggest revenue generators this year, as was the case last year. It was the most lucrative game in town last year. In fact, most traders I spoke to said that last year, in most treasury rooms, they actually helped to support and in some cases even helped to offset trading losses in other desks like the structured products, the CDS and all that, because volumes there dried up, right? Which desks are lucrative in the FX desk is basically across the board, from spot interbank trading to what we call the longer-term proprietary trading. Every option FX-related product like options, interest rate-related FX products were also one of the biggest revenue generators last year. Definitely, it's all due to wider margins, larger volatility, and a lot more hedging requirements by corporates as well. But mind you, the volumes did take a bit of a hit last year because of all the volatility. But they're pretty much, according to the traders I speak to, they're pretty much back to where they were middle of last year. And with all these increased regulations going on, with the more complicated products, traders say that it's now still back to basics as far as asset classes are concerned, and they expect that FX will be one of the asset classes that investors, both corporates, traders, and interbank dealers will be looking into. Susan?
Okay, well, let's continue this currency chat, Trish. The high yielders are gaining ground today after the OECD forecasts that the economy of the world's most industrialized nations will expand next year. So is it time to put on more risk? Well, let's ask Virginia Parker. She's the CEO and Chief Investment Officer at Parker Global Strategies, which just launched a new fund with Blacktree Investment Partners, and the fund is called PBCI, which is a currencies fund, only a currencies fund, which is quite dedicated with active and also passive strategies as well. So welcome to the program, Virginia. Let's talk about currencies. And there's a lot of optimism in the markets today. Do you actually believe in this trend?
Yes, certainly. There has been a lot of volume over the past year and a half. I think that the currency area is one place that people have been able to make sense of and be willing to invest.
And what about the dollar at this point? You're seeing it strengthen because of the words from the Fed, seeing that the U.S. economy is bottoming out. Well, what's your expectation? Are we going to see dollar strength for a while?
It's tough to tell. We've been through a little bit of a correction in the equity markets. And as we've gone through that correction, we saw a little bit of strength in the dollar as well and a little weakening in the higher yielders in the currency area. But if we start to see some strength in the equity markets again, it's very likely that we'll see some strength coming back to the higher yielders. So what's made it very good for currency trading is there's so much news that creates volatility, which gives everyone opportunity.
Yeah, well, what about the carry trade? Do you think we'll see that back in fashion then, given what you just said?
We probably will, but it may take a little bit of time. But certainly carry was working very well from mid-February until about 10 days ago.
Yeah. Okay. Well, let's see if Trish Louis, our Forex reporter in Singapore, has a question for Virginia. Trish, is there anything you wanted to talk to Virginia about?
Yes, I wanted to ask her when she launches her currency fund, right? Which are the currencies that she expects that will probably get the most interest from investors?
Well, we have a multi-manager currency fund, and about 80% of the positions are being taken in the G10, but that does leave about 20% for some of the emerging market currencies. So most of the interest in the G10 area, but with a fairly good allocation in the emerging area as well.
Okay,
do you think
well,
that,
Virginia?
Sorry.
Sorry, Trish, I'm just going to jump in here quickly and just ask Virginia a quick question, because your fund actually talks to a lot of these currency trading institutions, as well as you get privy to what trades are being put on. So let me just ask you this: which currency has more long puts these days?
Well, at the moment, we're long, if we look in aggregate across the 21 managers, we're long U.S. dollars again. And we actually went short some of the emerging market currencies just within the past few days. So, interesting shift.
Virginia, Trish here again in Singapore. I wanted to ask you about the G10, like you mentioned, since they have the most interest in your fund. I just pulled up the chart, and it looks like the Australian dollar, which has gained about 15%, the sterling about 13%. Do you think market has already priced in too much of the recovery story, and there could be a lot of risk of a pullback, or rather, there could be probably a lot more consolidation ahead? It's just going to be that much more harder to gain the extra 5% gain from now on?
We think that probably currencies like the Aussie dollar are going to follow what's happening in the commodity markets. We certainly saw a surge in the commodity markets more recently this year. So there is a bit of risk for continued contraction as far as the Aussie dollar goes, but we do believe longer term that commodity prices and the commodity currency prices will continue to offer very good upside for investors.
Okay, Virginia, we're running out of time here. Let me just quickly get a viewer email to you. This is from one of our viewers. I don't have a name here, but it wants to ask about the pound and the yen pair. What do you think of the moves for this cross?
That's a great question. If we continue to see renewed interest in the carry trade, then we would expect that the pound would increase in value and see some weakening in the Japanese yen.
Okay, so we're looking for some yen weakness. Okay, thank you so much, Virginia. That's Virginia Parker of PBCI, the new fund.